How to rebuild credit after bankruptcy. Bankruptcy can be a chance to start fresh, but the process takes time, and it can negatively impact your financial life, including your credit score. If you've taken the bankruptcy route and want to reclaim your financial health, these tips will make the journey easier. Understanding bankruptcy is easier when you break it down. Bankruptcy is a legal process for people or businesses to declare that they're unable to pay their debts. There are two types for individuals, Chapter 7 and Chapter 13. In Chapter 7, or liquidation bankruptcy, assets are sold to settle debts with creditors. It's meant for people without enough income to repay their debts. Most financial obligations are forgiven, and home foreclosure can be temporarily delayed. Chapter 7 bankruptcy remains on your credit report for 10 years. Chapter 13, or reorganization bankruptcy, involves a court-ordered 3 to 5 year repayment plan for debts. Chapter 13 is for people who make too much money to qualify for Chapter 7, but have a debt below $2.75 million, and it remains on your credit report for 7 years. So what does filing bankruptcy do to your credit? Bankruptcy is a negative credit event that usually causes a significant credit score drop. And since it remains on your credit report for 7 to 10 years, bankruptcy can make it harder to obtain credit or loans in the future. But even with a low credit score after bankruptcy, you can take steps to improve it. So here's how to repair your credit score after bankruptcy. Rebuilding doesn't happen overnight. This will take time, patience, and discipline. Number 1, assess your finances. Take a close look at your income, expenses, and any remaining debts to get a clear picture of your financial situation. This will help you create a plan for moving forward. Number 2, create a budget. A budget can help you manage finances and ensure that you have enough money to cover expenses. Look for ways to cut back on non-essential spending and prioritize paying off any remaining debts or bills. Number 3, get a secured credit card. With this type of card, you make a deposit that acts as collateral for the credit limit. If you use the card and pay on time, every time, you can build up a positive payment history and improve your credit score. Number 4, make timely payments. A history of timely credit card or debt payments is one of the most important factors in improving credit and will usually help boost your credit score over time. Number 5, monitor your credit report. Regularly check for any errors or discrepancies. By law, you can request a copy from each of the 3 major credit bureaus every year, but they're now available every week at annualcreditreport.com. So, how long does it take to rebuild credit? The timeline can vary based on the type of bankruptcy, the amount of debt discharged, and previous credit history. Luckily, you can start to see some improvement within a few months to a year, before the bankruptcy even drops off your credit report. Here's the bottom line. Rebuilding credit takes time, regardless of the cause, and there are no quick fixes. But if you remain patient and stay committed, you'll eventually see positive results.